Here's a full expansion plus a market maker options flow breakdown tied directly to ONDS's out of the money call options data for Jan 16, 2026 and Feb 20, 2026. Expanded market narrative. Ondas Holdings ONDS has become a focal point across trading and investor communities following the successful close of a $1 billion offering to a single institutional investor, a move widely interpreted as a major vote of confidence rather than dilutive distress financing. The structure and scale of the deal suggest long term strategic alignment, giving Ondas a war chest that materially de risks execution while enabling aggressive expansion in defense, homeland security, and critical infrastructure markets. This optimism has been reinforced by Stifel raising its price target, signaling growing institutional validation of Ondas's business trajectory. At the same time, the Department of Homeland Security's increased emphasis on drone and counter drone technologies provides a powerful macro tailwind. With regulators and federal agencies prioritizing domestically produced autonomous and counter UAS systems, Ondas is increasingly viewed as well positioned to capture government and defense related contracts. Community sentiment is strongly anticipatory. Traders and long term holders alike are speculating that the new capital will be deployed into strategic acquisitions, vertical integration, and accelerated production, particularly across autonomous surveillance, perimeter security, and counter drone solutions. With an investor day approaching, expectations are building for major announcements that could further validate the bull case, ranging from new contracts to expanded guidance. What market makers are likely doing based on the data. Snapshot of the setup. Price $13.44. Short interest 20.89%, very elevated. Borrow, hard to borrow, tight share availability. This already puts ONDS in a fragile equilibrium, high short exposure, constrained borrow, and rising call interest. Options positioning and market maker behavior. Jan 16, 2026 calls the pressure zone. $13.50 strike. OI 2,931. Delta 0.50. Pro ITM 45.18%. Stock is just below strike. Market maker implication. This is effectively a coin flip strike. Market makers who sold these are already carrying meaningful delta exposure and are likely actively hedging by buying shares as price approaches $13.50. Any sustained move above this level increases hedging demand rapidly. $14 strike, key level. OI 32,576, massive. Delta 0.41. Pro ITM 35.68%. This is the real battlefield. Market makers here are short a huge amount of call gamma, forced to buy shares into strength if price pushes higher, incentivized to pin price below $14 into expiration to avoid accelerating hedging. If ONDS trades decisively through $14, delta jumps, hedging flows compound, feedback loop forms, classic gamma pressure. $14.50 strike. OI 8,282. Delta 0.32. This strike becomes dangerous only after $14 breaks. Once it does, market makers will need to hedge multiple strikes simultaneously, increasing upward pressure. February 20th, 2026 calls, forward dated bullish positioning. $14, $15, $16 strikes. $15 OI, 16,500. $16 OI, 1,751. All currently OTM, pro ITM is 0. Interpretation. This isn't retail lotto behavior. This looks like institutional or swing positioning betting that ONDS will reprice materially higher over the next few months. Market makers are less hedged here today, but will be forced to hedge dynamically if price trends higher into February. Combined effect. What market makers are likely doing now? Based on the structure, 1. Actively defending $14, largest call wall, maximum pain for call sellers, price suppression via liquidity provision. 2. Hedging aggressively on intraday spikes, especially near $13.50 to $14. Buying shares into strength, selling into weakness. 3. Exposed to a volatility shock, high short interest, hard to borrow shares, any catalyst, investor day, contract news, acquisition, risks gamma squeeze, forced short covering, liquidity vacuum upward. Why the setup is asymmetric. Upside risk to market makers, high. Downside risk to longs, limited to lack of catalysts. Key trigger, sustained trade above $14 with volume. If that happens, call deltas rise, hedging accelerates, shorts compete with market makers for shares, price discovery can become disorderly. Bottom line, market makers appear to be walking a tightrope, controlling price near key strikes, managing large short gamma exposure, hoping volatility stays contained. But with a $1 billion institutional backing, policy tailwinds, high short interest, and dense call positioning, ONDS is structurally set up such that any meaningful bullish catalyst could overwhelm market maker control and force a repricing event.
Okay, so this is Tuesday, the 13th of February. It usually trades around 101 million shares. So far, 386,000 shares have crossed the tape. Okay, let's see whether we can get some underlying, some chart data for the stock. Let's see, this is the 5 minute chart. Let's get down to the daily chart and see what we have. Underlying trend, strongly bullish. The stock has just continued to print higher prices, and the extrapolation seems to be suggesting that it might go into a contraction, going all the way towards the 24th of February. The 40-day moving average is also expected to continue to rise to curtail any pullback. So the stock is expected to trade within this tight space here, at least up till the 5th of February. So this is the space it's expected to trade within. But policy tail. I mean, there could be catalysts that might be announced. The stock is never out of the news. At least expect something every week. So this may not be what may happen. But in the event of as it is right now, this is what the algos are extrapolating. Okay, so thank you very much for watching this video.